We may start thinking, why save money if banks keep making more? Banks say our money grows in our accounts, but that's not true. Money gets more, but its value doesn't keep up with rising prices. So, keeping money in the bank actually makes us lose money over time. In this video, we'll share 6 things to invest in that can protect your wealth and help you pass it down to future generations. And wait, there's a bonus 7th asset that's really cool. Stick around to find out more. Elevate your finances with WealthWise Insider. Wisdom for wealth builders. First on the list is God's money: gold, silver, and platinum. These metals have been valuable for ages and are trusted for holding their worth better than paper money or digital bank numbers. In ancient times, people cherished gold, especially the Egyptians, for their royalty. Many even fought battles for silver. Some countries even based their money on gold due to its trustworthiness. When governments print too much money, prices rise, and money loses value. But gold, silver, and platinum remain valuable. During uncertain times, people turn to these metals as a safe investment. You can buy real gold, silver, or platinum items like bars or coins, or invest in funds or companies that deal with these metals. With technology, you can even buy digital versions of these metals online. Next up, industrial commodities, raw materials. These are the basic stuff we use to make things, like copper for wires or oil for fuel. They're super important for industries, and how we can need them can show how well economies are doing. Throughout history, civilizations have depended on raw materials. The Industrial Revolution, for example, used coal and iron to change the world. These materials powered machines and built railways, changing societies. So why invest in them? Well, they're always in demand as long as we're building, making stuff, and using energy. When economies grow, we need more of these materials, so their prices go up. This can mean profits for investors. Also, having them in your investment mix can balance risks. If the stock market is down, commodities might be up, and vice versa. You can invest in these materials in a few ways: buying futures contracts, joining funds that group them together, or buying stocks of companies that work with them. And just like with precious metals, you can invest in commodities online without actually having them. Now let's chat about sovereign guarantee. It might sound fancy, but it's simple. It's a promise from the government. If a business can't pay back its loans, the government steps in and covers the debt, reassuring investors. This encourages investments in important projects. For example, if a country needs funding for a risky project, like building a big dam, the government might offer this guarantee to attract investors. It's seen as safer because the government supports it, acting like a safety net for your investment. This is especially appealing in uncertain times or in countries with shaky economies. Government bonds are a common way to invest with this guarantee. You lend money to the government, and they promise to pay back with interest. These bonds are considered low risk because of the government's backing. Some countries also offer unique investment opportunities with sovereign guarantees to attract foreign investors or boost their economy. Let's talk about safe haven currencies. They're like financial shelters in uncertain times. When the economy is shaky, investors want to keep their money safe. Some currencies become these safe spots because their countries have stable economies, strong financial systems, and a history of political stability. For example, the Swiss franc and the Japanese yen are often seen as safe bets. During global crises, these currencies stay strong or even go up in value when others drop. Investing in them can be smart. You're less likely to lose value quickly and can be easily converted into cash. Plus, they balance out risky investments. They can invest in safe haven currencies directly through the foreign exchange market or through funds and accounts that focus on them. Next on the list is land and real estate. They're more than just places to live or work. They're tangible assets you can see and touch. Throughout history, land has been a symbol of wealth and power. From ancient times to now, owning land or property has been a way to store and grow wealth. Think of kings expanding their territories and pioneers claiming new frontiers. Nowadays, real estate in cities like New York, London, or Tokyo is super valuable. Investing in land and real estate has perks. It's limited. They're not making more land, so prices can go up. Renting out property can bring in a steady income, and properties often go up in value over time. Plus, there are tax benefits in many places. The most direct way to invest is by giving property, but that means dealing with upkeep and tenants. If that's not for you, consider real estate investment trusts. They own or finance properties, so you can invest without buying. There are also crowdfunding platforms where you can join others to invest in property projects. Moving on, let's discuss value stocks and mutual funds. While the stock market often focuses on trendy companies, there's another approach: value stocks. These are shares of companies believed to be worth more than what people think. Alongside mutual funds, which pull money from many investors to buy a mix of stocks, bonds, or assets, they offer a simpler way to invest without picking individual stocks. Value investing, popularized by Benjamin Graham in the mid-20th century, suggests buying stocks for less than their worth. Mutual funds allow individual investors to enter the stock market without much knowledge or money. To find value stocks, research companies with solid fundamentals but lower stock prices, often due to market overreactions or temporary issues. Mutual funds are widely available through banks and investment platforms, each with its strategy and risk level. Index funds, a type of mutual fund, aim to match the performance of a specific market index. Now let's talk about collectibles, our seventh and bonus asset. These are unique items valued for their rarity, beauty, or history, like art, antiques, rare coins, stamps, vintage toys, and sports memorabilia. Unlike regular investments, collectibles have personal and emotional value, making them both a hobby and an investment. From ancient civilizations treasuring rare artifacts to modern collectors, owning and preserving these items has been popular. Collectibles can appreciate over time, especially if they become rarer. They offer a different way to diversify an investment portfolio, as their value isn't tied to traditional markets. Many find joy in owning and sharing collectibles, appreciating their authenticity and history in a world of mass-produced items. Diversifying your investments across various assets, from precious metals to real estate and collectibles, can help safeguard your wealth and offer opportunities for growth, ensuring financial stability for the future. Now, what type of investment are you most interested in exploring further? Share your thoughts in the comments below. And don't forget to subscribe to WealthWise Insider for more insights on achieving financial prosperity. Until next time, remember, smart wealth, wise future.